What's up, guys? Today I'm going to walk you through my exact pre-market process that I use every day to be able to pre-plan my trades and my areas of interest. We do this every morning before the market opens in our Discord. If you want to join, here's the link for that. All right, but this is the exact process that we use to prepare ourselves before the market opens. All right, to be able to identify the trends, the supply and demand areas, and be able to map out exactly where we want to attack the market, our entries, our ideal areas that we want to jump in. Now, it's important to note that I am a supply and demand trader. And so while I do use some indicators, I'll show you those indicators on here. I am a supply and demand trader, so that is primarily how I trade. I think it's the best way to trade. There's obviously other strategies. I think it's the best way because number one, the market is based upon supply and demand. Every market that has ever existed has been based upon supply and demand. And so I think that's the best way to trade. It's something that, doesn't really require a high IQ. It's not something that is incredibly hard. And so it's something I think that anybody can do. So if you like supply and demand, why don't you give this video a like and subscribe down below? Let's go ahead and let's look at ES today. Today is CPI day. It's Tuesday, so we had CPI today at 8:30. All right, so this exact process is what I've done every day for the last 3 years, and it's what's made me a full-time day trader. It helps me yield at least $500 to $1,000 plus per day. And so let's go ahead and let's walk through it step by step. One more important thing to note is that when it comes to supply and demand trading, I don't think that it's purely a strategy, right? Supply and demand and identifying key levels, it is a methodology. It's about getting a perspective of the roadmap of the market. All right. So since there's no supply in the futures market, all right, it all comes down to demand. All right. And so these levels that we identify, since there is no supply, what has to be the determiner of that? It's at its core, it's going to be price. And so buyers want to buy at particular prices and sellers want to sell at particular prices. Eventually, we will reach a point where buyers don't want to buy, and eventually, we'll reach a point where sellers don't want to sell. So let's pull up ES today on CPI day and let's take a look. Now, obviously, we're a little bit zoomed out here, right? Now, this is just on the 5 minute chart. Now, when it comes to supply and demand, one thing that we have to start to analyze is the longer term. All right. So let's move up to like the 4 hour. All right. Actually, let's go to the daily and let's take a look at the daily pattern here. All right. And again, this is based upon a really long time. And we're looking back here, back into October of 2023. All right. So there's a couple of things that we can identify here. Number one, we can see a very clear trend. So in my opinion, it's always important to just identify, well, what's the actual trend of the market here. So when we were in the market here, we would kind of have adjusted it to there, but let's say we're just starting fresh. All right, we would have kind of looked at it from this perspective, which again, if that's a methodology that you want to look at it that way, you can. Okay, I like to look at it also based upon the historicals. All right, so there's the lower end of our channel, there's the upper end. All right, now inside of channels, there can be shorter term and there can be longer term channels, right? So just because there's one longer term channel does not mean that there can't be another one, right? So we could look here and say, okay, there was a channel here. We could take this channel and we could do it like this and say, okay, there was a channel here. All right, we had this big failure right here, right after the election, about March of this year. All right, we could look here and adjust it this way and say, okay, for at the time being, right, this is where we had a big failure, right? So we can look at it all different kinds of ways, but the important thing is just kind of look at the bigger picture here. All right. Now again, this is totally from scratch here. I don't remember any of my key levels from this morning. So let's go ahead and let's just start to identify right today, right? So this is the daily. All right. Now there's a couple of things when it comes to supply and demand zones. All right. There's a set of rules, and I have a course on supply and demand, which if you want that course, you know, join our Discord, reach out to me. I'll send it to you for free. So I have a full length, like 6 hour course on using supply and demand and key levels in the market. And so there is a set standard of rules that we have when it comes to identifying supply and demand, right? So supply and demand is all based upon price, right? It's based upon level acceptance, right? So when we get to a price at the high, when we get to a price at the low, all right, either buyers have to accept these prices, right, or not accept these prices. Because if buyers don't accept the prices, well, then they're going to start selling and the market's going to start panicking and we're going to move down. All right. So the market generally works in a couple of different patterns. All right. So I'll move up here so I can draw them really quick. All right. So the market generally works in drop, base, drop. rally, base, rally, right? Rally, base, drop, or drop, base, rally, right? That is the general pattern, whether on the long term or the short term. Some people get really hung up on long and short term, but really the same things that you can draw on the long term, you can draw on the short term. All right. But most of the moves in the market, aside from news and liquidity events, that's the general pattern that the market takes. All right. So we can look at the daily here and we can really start to identify these patterns. All right. Here, see, so here we can see drop, base, rally. Right. And then there's rally, base, drop. Right. Drop, base, rally. All right, we can see that over and over again. We can see rally, base, rally. Again, sometimes the moves are bigger than others. Sometimes the rallies go on forever. Rally, base, rally. And again, another multi-day push up, drop, base, drop. All right, so we can start to see and identify these. Now, this is on the daily. So how does that help us when it comes to the shorter term, right? Because most of us aren't swing traders. Most of us are day traders. And so, how does this actually help us in the shorter term when it comes to identifying these levels? So again, there is a set standard, set of rules that we're looking for to identify different supply and demand zones. But number one, we're looking for one of those patterns. We're looking for rally-based rally. We're looking for drop-based drop. We're looking for a drop-based rally or rally-based drop to start to identify our zones. All right. So looking here at the daily, again, price action for ES since June has been kind of all over the place on the longer term. So if you're looking at the daily here, I mean, not much of this is very great. I'm not too big of a fan of this price action. All right. So, we could potentially look right here and kind of see somewhat of a base. All right. But again, you see how quickly this candle came up back into here, right? It didn't really hold very well. All right. So there wasn't a ton of liquidity up there. All right. So when I look at the daily, right, and when I look at price action, and again, I'm just trying to identify the overall trend. Obviously, the market's bullish, number one. All right. Although we failed this major long term channel, which caused a major sell off, obviously the market's bullish. Right. So, in my opinion, that means that sells are going to be a little bit, yeah, it's going to take more for me to want to get into sells. All right. Now, that doesn't mean that we can't look for reversals, but for that to happen, there's got to be a couple of things that need to happen for us to do that. All right. So, let's zoom in here. Now, because we can't identify anything super serious on the daily here, let's go ahead and let's zoom in. Let's look on the 4 hour and see if we can start to identify any zones. Well, now there's some things that are starting to become a little bit more clear, especially here on the 4 hour, right? So now we are starting to kind of see a zone here, right? So we're starting to see some zones formed. All right, so we can start by just putting one of these on here. All right, so at the high, and remember, supply is always at the high, demand is always at the low. All right, we're starting to see a pretty clear zone here at the high. Now ES is coming back up into that zone right now. Now we can see that this technically started over here. Now, now technically we can see that this started over here. All right, so this was kind of the first attempt in this zone. We could probably even drag it down a teensy bit farther. All right, we could probably even drag it down to there since that was the opening of the gap. All right, so technically this zone has started over here. All right, and then this has been the second back test. All right, so this is the start of just the longer term. All right, so you really only have to do the long term one time. You don't have to do it a bunch of times. But once you get done with the long term, until the long term kind of gets put away, you don't really have to, until we've gone past that price action, then you really don't have to do it very often. All right, but on the 4 hour chart, this so far is what we have here as our high, right? And we're in the realm of all time highs here on ES. All right, and so this is our macro supply zone up here. Now let's start to look again at the shorter term here on the 4 hour. Let's see if we can identify really any demand zones. All right, now looking at yesterday's session, the overnight session, we are clearly having some kind of a of a basing structure starting to build up down here. All right, anytime there's a basing structure at the low, it's a pretty good sign that we're building up some buyers into this market. All right, but we kind of spent a lot of, we obviously had this big drop, base drop. All right here. So what did this do? This built up a supply zone, right here. All right, so we could probably include all of this candle here. All right, and then look at where price came back to later on. All right, later on, price came back up into this zone and then rejected and fell. All right, but one important thing to note here is that when we look at how price fell, right, it fell here. Notice how it did not elevator down and it did not create a new low. We would have needed to create a new low for the market to turn bearish. All right, so although we did fail, we did not really elevator down. We didn't get a more full-bodied 4-hour candle, and we did not create a new low. All right, so the market's bullish. I mean, there's really no question about it. Everybody can say whatever they want. The market is bullish for the time being. All right, CPI today wasn't really too bad, and so the market's bullish. All right, so you notice this is the second test up, so we didn't sell off. All right, did the sell work? Yes, it was. And I think it was a good sell. The only issue that I started to have was we started to spend a little bit of time up here. Right, we started to spend a little bit too much time up there, but still only 4-hour candles, so not a big deal. All right, but one of the standards for supply and demand that I go over in the course is time spent. Right, the more time that we spend in a certain area, all right, the more probability that it has to break through. Okay, so now I got rid of that supply zone because if you look here next, all right, we didn't sell off. Then notice how quickly we busted through that supply zone. Why did we bust so quickly through that supply zone? Well, number one, we'd already come up and back tested it once. And my rule is that if a zone has been back tested already more than once, then I'm not willing to take a trade off of it again. All right. If it's been tested more than once or at least 2 times, right? Sometimes the second time can still work. All right, but I'm a little bit more hesitant on the second time through, and here's why we can see why. This came down, did not sell off, gave us a big push to the upside. All right, so we have a rally-based rally. All right, now we can see here on the shorter term, again on the 4-hour, we start to build another zone up here. All right, we start to build our new supply zone. All right, we start to build our new supply zone up here at the high. All right, so now we can kind of see here that, again, this fell outside of this supply zone. All right, we could even look here and say there's a micro demand zone, again, on a shorter term time frame. All right, we can look here and say, okay, there's a shorter demand zone right here, okay, that we quickly kind of fell into. But again, you can see why is the market so bullish? Because although we're failing, we're not getting any continuation. All right, in terms of the longer term. So even though we failed, did we create a new low? No, we did not create a new low. So again, the market is still bullish. All right. Sometimes when the market's this bullish, I just wait for buys. I don't even take sells. Right? You can just wait for buys. All right, because oftentimes after big fails like this, all right, the more aggressive they are, in my opinion, the better, because aggressive downs are oftentimes followed by aggressive squeezes. All right, so the market's going to wait until enough sellers get in, and then buyers are going to start buying up, and they're going to squeeze the sellers out of those market. All right. So let's look at the current time frame now that we have a context of the market. All right. So again, we have our upward supply zone here. We have our macro supply zone at the top. This zone's been tested twice. So again, in my opinion, in terms of sell, it's not tradable unless we fail. All right, for a sell. But let's take a look here. And let's start to take a look at this action here today. All right. So again, this supply zone. All right, this supply zone came up, formed here, back tested here. Again, look at how slow this is. All right, we spent 1, 2, 3, 4, 5, 6 candles inside this supply zone. It's not a good zone. All right, all those 6 candles were spent for buyers to buy up orders. All right, again, we spent a long time in there. All right, then we came down, again, came right down to this lower end demand zone. All right, came down to this demand zone here that we formed right here. So we came down to that demand zone and then pushed up from there. All right, so we didn't even re-enter this demand zone. Now, what made this demand zone nice, and I left it up, was just because it got past through doesn't mean that the price levels can't still hold up. So you see, we passed through here, but then re-entered. All right, kind of reconfirming it as a demand zone. Now, could it have been passed through again? Yes, but obviously we had multiple touch points on the 4 hour here, again confirming bullish behavior. All right, now let's look at today. All right, now that's the 4 hour. Again, still a pretty long time frame. I don't think most people are trading on the 4 hour. Now, remember what I said, everything that you draw on the longer term time frames can also be drawn on the shorter term time frames. All right, so we had our big 4 hour supply zone here. So we can look at today, we can kind of say, well, why is the market bullish today? Well, it's very simple. All right. Obviously, CPI gave us a big launch up today. All right, but the rest of the reason is very simple. All right, we failed this supply zone. Make this a different color so it's easier to see. All right, I changed the colors on this so that hopefully it's easier to see, but let's evaluate, well, why is the market bullish today? Well, number one, we failed, all right, our supply zone up here, but did we sell off? All right, did we form a new low? All right, no. On the shorter term, yes. All right, on the shorter term, we failed the low and had a short-term failed breakdown or a short-term breakdown yesterday. All right, but did we sell off and form a new low on the macro term? No, we did not. We came down to the lows, again, based, rallied. All right, we had this weird, really weird candle here at about midnight. All right, but we came back up, based, dropped. All right, and then it quickly here at the mark or at CPI news today. Again, CPI news wasn't bad. And so therefore we're getting the market to push up here today. But why? Again, why is the market doing that? All right, the market only moves up if two things happen. One, sellers are not confident. If the market's not panicking, number one, and number two, buyers are confident in these prices, meaning buyers are willing to buy into selling, right? So they're willing to buy at these prices. So the ask price is moving up, and buyers are taking those bids on the ask price, right? They're taking those buys, all right? And so that's the only reason we're moving up. Now, what's reason number two? All right, number two, and this is where the market kind of told us the roadmap here, is that we broke into and above this supply zone. So that has created the long-term trend of this movement up. All right. Remember what I said, supply and demand, it's I don't even know if I would consider it a strategy. It's a methodology. It's about creating a perspective and a roadmap on the market. All right. So when I did our key levels today, when it came to our pre-market, well, what did we have? Again, let's zoom down now to the short-term time frame. All right, maybe let's go down to 15 minutes. So what did we have today? All right. So I always start off the day with a macro support, a first support, and then a macro high. All right. And then upward and downward targets. So price is either going to do two things. Or I guess price is only going to do three things. All right. It's going to base. All right. Or it's going to kind of in between zones. All right. Or it has been basing and it's either going to fail, backtest fail, giving us a breakdown, or it's going to base and then it's going to form a high. All right. And then it's going to break through that high and then push up. All right. But 9 times out of 10, again, majority of the time, the market bases, all right, forms a low, it fails that low and then retakes that low, giving us a failed breakdown. Same thing at the high. It comes up to the high, breaks through, breaks back in, giving us a failed breakout. That's what the market does 90% of the time. And why does it like to do that? Because the market likes to hunt for liquidity. All right. That's why almost every single day there's a failed breakdown and failed breakout because the market's just hunting for liquidity. Right. Again, the market's duty is to separate you from your capital. All right. So that's what it likes to do. It likes to make people think that it's moving up and then move back down, or it likes to make people like retail think that it's moving down while buyers are just building up positions and moving it back to the upside. So everything is a trap, right? I would say 8 to 90% of my trades are traps. in terms of I'm trying to get into the trap. Like I'm not trying to get trapped. I'm trying to identify the trap. Like, okay, if if we're moving down, where do buyers want to trap sellers and then move it back to the upside? All right, so then we can look at these zones here. We can start to identify some key prices here. Okay, well, where is our key support on the market today? Where's our key low? All right, so here's our key low on the market. We could probably open this up and look and see that that's probably the daily low as well. All right, so that's the daily low. Now, pre-market open here, what do we have kind of as our first support? Well, first support is most often identified as the previous high. All right, previous high here. All right, so this is our first support. So 6409 was our like kind of our first support. All right, and our macro support was 6393. All right, so I really wasn't looking for the market to push down unless we failed 93, re-entered into this re-entered into this demand zone, and potentially fail it to give us an elevator down to the downside. All right, so in order to move down, we would have needed to failed this demand zone. All right, so remember, this is not necessarily a strategy. This is something where we are creating a roadmap of the market. Because again, unless the market failed 6393, there was no probability that that price could reach down here. Okay, in order to reach here, first it had to come down. Okay, buyers had to not accept these prices, and sellers had to sell it through and to move down until we got to a place that buyers could accept prices. Same thing for the way up. If price is going to move to one of our upward targets, well, in order for price to get there, right? In order for price to get there at the highs, there's certain prices that have to accept. All right. So for example, when we failed here on ES, now 6420 was now for example, when we failed here on ES, 6420 was actually a really important spot here down here too. All right, 6420. All right, we failed 6420. So in order to get to 6428, all right, we had to, and if you keep in mind here, look at this pattern that we're painting out. All right, we're pushing up. We created a base on the 5 minute, or sorry, the 15 minute. Created a base, and we dropped. But still, look at how these big wicks came up into here. Not good. All right, this means this is weak. All right, so that means that this kind of smaller 15-minute supply zone we're creating is very weak. All right, we came down in here. All right, and then we pushed through. All right, what did this give us? This gave us a break of structure. All right, so as the market moves generally in a couple of different patterns, as it moves in, it moves in rally-based rally, drop-based drop, drop-based rally, rally-based drop. Okay, it also does two different things. It does break of structure and it does change of character. Break of structure gives us continuation. Change of character gives us reversals. All right, and change of character is often defined as we paint out a major we're kind of trending upwards where we're breaking or we're going through, we're having break of structures and causing a trend. All right, and then we fail the previous low or high of that trend. That gives us a change of character. All right, so if we were to have a change of character, then we would push up here, create this low, push up again, and then fail this low. That would have given us a change of character and probably a good sign that we are moving to the downside. All right, so this zone up here was weak. All right, but let's just assume we were here at the pre-market open. So what would I have said here today? Well, number one, I don't think the market moves down until we fail 62 or before we fail 63.93. So I came on our pre-market today and said, I am bullish, especially with the CPI news. I am bullish. All right, ideally, the first area of support that we want to hold is 64.09. All right, first area of support that we want to hold here is 64.09 because if we can hold 64.09, that tells us that buyers are accepting those prices and that price has to move up. All right. So in order to get down to 63.93, we first have to fail 64.09. The market's told us that buyers have accepted these prices. It was a previous resistance point. It's now turned into support. All right. And so from there, the next target up, which again, I had all these targets. The next target up was like 28, 36, or 36.40. Right. My ultimate macro target at the upside today, my ultimate macro target was actually 56. All right. So if we look over at the historicals here, all right, we have a line here. All right. So my ultimate target today was up here at 56. We draw a line. All right. My macro target was up here at 56. All right. And so, number one way to keep yourself out of FOMO is to set upward targets and cut out positions there. So, today I got in the market, all right, upon this recovery of 64.20. All right, because this 15-minute candle ultimately told us that buyers are accepting this position. And then obviously we quickly recovered it here. All right, that's where I took my first buy position. I cut out 50% about right here, another 10% about right here, and then let the rest run for my ultimate macro target up here at 64.56. And so today I did about $2,200 on this trade. All right, but this is the exact process that I do every morning. All right. It's about creating the roadmap of the market, because the thing is that the market almost never, you know, if we look at the market almost never just goes like this. Almost never. All right. So if let's say we're down here, it almost never just points up to right here in just a perfectly straight line. Okay, oftentimes we have our starting spot, all right, and then we maybe have our upward targets and then our downward targets, right? And so it's going to have to first come to here, all right? This is kind of like the first road. It's kind of like the first road, right? The first road sign that we come to, all right? So either this is the right road or it's not. We maybe need to turn down a different road to get to a new one. All right, well, now maybe this is the right road, all right? Or we need to turn back to a different road, all right? And this is the right road. All right. And now this is right. So now maybe we can move past this one. All right. Now to this next upward target. Now, and maybe this is right. Maybe this is not. So, oh no, we need to turn back around here. All right. Now to this target where again, buyers gain some support. This is the right road. Now we make another turn. All right. And that takes us to our target. All right. But oftentimes never just goes in one straight line. All right. So if we can identify these particular areas that the market has interest, that again, buyers want to buy and sellers want to sell, because price cannot move up unless buyers are buying. Price cannot move down unless sellers are selling. All right. And buyers aren't buying. All right. So oftentimes people get caught in these moves because they don't understand the general patterns of the market. That number one, the market 90% of the time just moves back and forth in between zones. All right. Majority of the time it forms a low, it fails that low and recovers it. All right. And this is why you see a lot of times the market again forms these patterns. All right, where we break down, push up, break down, push up. All right, so we're getting continual breakup structures here, forming a low, losing that low, forming that low, losing that low, forming that low, losing that low. But here, all right, remember we formed that low here, and then look at what we did. We retook that low, we back tested that low, and then squeeze. Okay, these are probably 80% of the moves that I take. I'm looking for the recovery of lows to give me a change of character in order to give me a reversal. Either that or I'm looking for a break of structure to give me a continuation. All right. But that at its core is exactly what I do on pre-market every morning. Now, on my pre-markets, I'm a little bit more detailed in terms of prices, all right? Because remember, supply and demand is all based upon price, right? Price is king in this, all right? Because either buyers like their prices uh, or they don't like the prices. Buyers either like prices or they don't like prices. So they're either going to buy here and then ask price is going to move up to a better price, or they're not going to buy here. The market's going to start selling off because of panic. That's what causes sell-offs. All right, because buyers aren't buying at those particular prices. All right, so on my pre-markets that I do inside of our live trading Discord, I do this every single morning, all right, for our community. But like I said, I get a little bit more detailed on historical prices. All right, so we identify it as key levels. All right, so supply and demand kind of lays out the foundation, and then key levels in terms of prices creates the roadmap for us to work backwards from to say, okay, you know, we want to trade if this, then that. We don't want a crystal ball, right? There's no crystal ball here. Nobody can tell you which way the market's going to go. All right. But we take trades. If this has to happen, then we do that. All right. Because we don't want to try and predict the market. If you want to try and predict the market, you're going to lose every single time. All right. Now, there's a couple of indicators that we can use alongside this. All right. So this is our Blitz indicator. All right, so Blitz indicator, it's an EMA based indicator that actually lines up very good with supply and demand as well. So we can see this buy was given to us then before the open here. This is on the 15-minute. Let's look down on like the 3-minute. All right, so it works very well with trading inside of ranges. All right, it also works very well at catching these big macro moves. All right, so I will pull this up to see where we are relative to the EMA because a long-term EMA is also going to dictate overall where the direction of the market's going. If the EMA is flat, it's probably going to be moving sideways. If it's turning down, we're probably going to be going down. All right, but I use these in combination, all right, with supply and demand. I also use our underground scalper. All right, these are really the only two indicators that I primarily use. I have some other indicators that I go over in the supply and demand course. All right, but the underground scalper is definitely meant for more of like a 5-minute scalping, where it is based upon supply and demand, and where we're actually using these upper and lower clouds as our supply and demand. So it takes a look at volume and a lot of different things to determine where there's key areas of interest. All right, and then there's a certain set parameters that we are looking for crossovers. So very good sell here, very good buy here. All right, not a good buy here because again it filled the parameters. All right, but again that wasn't the direction that the market was going. All right, but eventually we got a really solid buy here that gave pretty much the continuation of this movement up. Got a sell here, and there's obviously conditions that don't work well for every indicator, and we spell out conditions specifically for the underground scalper, for the blitz indicator, on the conditions that are most appropriate to use each of these indicators. All right, so those conditions, those market conditions that you look for. But we primarily trade these indicators on ES, NASDAQ, and gold. So I primarily trade ES, but we also trade NASDAQ and gold using these indicators, and they absolutely crush. All right, but and both of these accompany supply and demand so well. All right, but remember, supply and demand isn't necessarily, it's a strategy, right? It's methodology. It's about laying out the roadmap of the market. Okay, the market can only go up into this supply zone if we find support at this demand zone. It can only go down this, down back into this zone, right? Because it fails this demand zone, right? Like we could only come down here if we failed here, right? But what did buyers tell us? Buyers told us, long-term buyers told us that they accepted these prices, all right? Because the reality is that inside here, there's a lot of long-term buyers that you don't see because long-term buyers don't insert all of their orders in one order, right? They do it over time. All right. But what we know is that there were not buyers that were willing to buy down here. Right. They were willing to continually buy up here. So this confirmed and told us that the market wanted to push up. And then what did we have? We had a change of character. We cleared this high with the CPI news this morning. That surely told us that the market was going up, and that's why I took a buy today. So now, if I was looking at this, right, if this is where we're looking at today, where would I like start to pre-plan my trades? Like, where would I start to want to get into entries? All right. So again, you're not seeing all the other lines that I have on here, all right, because those take a little bit more time, and we don't want to be on here for 3 or 4 hours. All right. Those videos take a little bit more time. All right, but we'll go over that in more in depth. All right, but let's take a look here at the current market open. All right, so again, on pre-market today, I said we need to fail 6409. Okay, so there's kind of two areas of interest that I'm looking for here. Number one, I'm looking for here, all right, as my first area of interest, all right, because I want to see what we do around our first support. So in terms of a buy, that's where I may be looking to buy. All right, I'm also potentially looking for down here for a buy. All right, now this is post CPI, and so I already wasn't crazy about trading today. All right. So I wasn't really looking for sells. I mean, potentially up here, but again, we were busting through this supply zone. So sells to me were already a bit risky. All right. So first off, I was looking for entries here and I was looking for entries here. Now, obviously, we did not come down to 409. All right. So number one, that tells me that, first off, it's bullish. Right. We didn't even come down to our first support. Right. For 15 minutes, we held up this area here and then we recovered a previous low of 6420. All right. So this is where I got into my buy. So sometimes it's going to shift, because price action is ultimately going to dictate when and where we take positions. Right. Sometimes it doesn't always work out. All right. Price action is ultimately going to dictate where we take our positions. All right. So I wanted 6409. I wanted 6393, but price action did not give that to me. Therefore, I looked for the recovery of 64.20 because again, I'm thinking, okay, my bias now is, I mean, it's being confirmed that we are bullish. So let's move to the upside. All right. And then I got confirmation of this with volume. No move in the market is confirmed without volume. All right. Because if you're in a buy, that means you need other buyers to buy. If you're in a sell, you need other sellers to sell. What comes with that? With volume. So if there's no volume in the market, or if the buy is not moving in your direction, right, it's probably going to fail. There's a high probability that it's going to fail. All right. So got quickly confirmed with volume. All right. And then obviously the volume held up. So we would have needed to fail this low down here in order to continue down. All right. So by the time that I cut out 75% of my position, my stop is now where I took my buy here. My stop is now in take profit. So I now I've won the day. There's no chance I'm losing. All right. And then I moved up. All right. Every new low that we painted until I got full stopped out. All right. And that's how you can use this in trading. All right. Now, if we zoom out, let's look back here historically. Again, we could have looked at this down here. We could have said, okay, this is our macro demand zone down here on the shorter term. Like let's say we were starting here on the 11th. All right. Let's say we're starting here on the 11th. All right. Here's the market open on the 11th. All right. We can see we're in a supply zone, right? We're inside of a supply zone. It is weak. All right. But where's the macro low? All right. The previous low right here. All right. So there's our first support for the day in terms of the zone. We're building a macro supply zone up here. All right. There's our first support. All right. So what did we do? Number one, we started off with a macro failed breakdown. All right. We failed the low. All right. And this is why most of the time I don't get into breakdowns. All right, I would have wanted to see a back test on this low for us to short and go to the downside. All right. But here we created a low. We pushed up. We failed. We recovered. Back tested. I always look for the back test. 9 times out of 10, there's going to be a back test. All right. We looked for the back test and then we pushed up. And guess what? Here's the exact buy that I took on Monday. All right. I took right around there. Let me change the color so you can see it better. Okay. I don't remember the exact price, but I took it right around there. All right. That's where I took the buy. All right. Because again, just waited for the back test. All right. We have a new macro low. All right. Buyers coming to the downside here to build up some liquidity. They came down here, built liquidity, pushed up, back tested, got more liquidity, and then confirmed with volume. Again, if there's no volume, it's not confirmed. So then what do we have to do now? Yesterday, we had our first upward target, kind of over our previous low right here. All right, then here, next upward target, here, here. All right. And I'm looking at the charts to be able to identify these. But then, all right, now look at what we did here. We came all the way up to here. All right. At the very top of our supply zone. All right. What do we have here? Again, we had a micro supply zone here on the 5-minute chart. And then ultimately, we failed right here. All right. Now, price had to fail this previous low in order to continue down the downside. If we would have held up 64.25, we would have not failed to the downside, right? Anywhere between 425 and whatever this is here, about 427, we would have not failed to the downside. We would have kept going up. All right. And so I believe I took a small short maybe here upon this failure. And then what ultimately made the move work? Volume. Volume confirmed the move. Again, no volume, no move. All right. Now I knew there was going to be an aggressive squeeze at some point. You never know where it's going to be. All right. But obviously we had a break of structure. Right. Break of structure, break of structure, break of structure, break of structure. All right. Continuing all the way to the downside. So that's how I would use supply and demand in trading. Again, we know the micro scale of things, but again, you can take everything from the macro scale and take it down to the micro scale. All right. So again, on the 5-minute here, we can draw little supply zones, right? Or little demand zones, little supply zones. All right. We can see them all around, but all that matters is what's the general pattern of the market. All right, here we had a drop base rally base drop. So here's our micro supply zone. All right, then we had a drop base rally. All right, so we got a change of character here by breaking this previous low. All right, you can see we even back tested that low and pushed up. Again, confirmed with volume. All right, guys. So that's everything in kind of a general overview of what I do on the pre-market every single morning. Again, in the pre-market we go a little bit more in depth because I have more historical prices. All right. So without taking 2 or 3 hours on here, all right, I wanted to make sure that just go through the gist of supply and demand. Again, I have that course. Reach out to our Discord. I will give you the course for free. All right. And you can go through it and teach us more in depthly the rules that we have around drawing supply and demand zones. All right. And if you're interested in the indicator, the underground scalper, all right, and the blitz scalper, join our Discord and ping out and say, hey, I want to try out the scalpers. All right. I want to try out the underground scalper. I want to try out the blitz scalper. It's something that we've heavily back tested. And it's something that is really the only indicator you need. You don't need 20 different indicators. All right. You only need one or two. If you have too many indicators on your screen, that's probably why you're losing majority of the time. All right. So if you want to join our Discord, here's the link right here. It's also down in the description. Make sure you like and comment down below if this is something that helped you, and only if. And if you have any questions, make sure you drop those down there as well. I'd be happy to help you guys out any further. Thank you guys so much for watching. We'll see you later. Bye for now.